Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM here to give your top 3 market points of the week. Now, we are trending positively yet again this week, so let's just dive right in and see what those top 3 points that were driving the markets were. At number 3, it is Paramount Skydance preparing a bid to potentially acquire and merge with Warner Brothers. So this bid is being prepared by the Ellison family, and should it go through, it would combine some of the most recognizable names in media, such as HBO, MTV, CBS, as well as brands such as Mission Impossible, Harry Potter, and a lot of others. Now, in addition to this, should the merger go through, this is going to reduce the legacy media companies from about 5 key players to now 4. So we're going to see some further consolidation in the media space. At number 2, a lot of you have probably already seen it this week, it's Oracle's meteoric rise over the past week. Oracle is up over 30% just in the past week alone, given their aggressive outlook going forward for their cloud business after they announced a plethora of deals going forward with the likes of OpenAI, TikTok, and NVIDIA. This has pretty much caused their remaining performance obligations to balloon next year by 77%, expecting their revenue to grow to close to $18 billion in the next upcoming fiscal year, with the expectations by 2030 for their Oracle Cloud Infrastructure segment to grow to revenues of close to $100 billion by 2030. So Oracle has really caught the momentum and has put themselves directly in competition in that AI cloud computing space, and have really caught the momentum over the past week, and is what is really driving markets over this past 7 days. And finally, point number 1, I promised you last week we were going to talk about it briefly. It's CPI. So CPI did come in a little bit elevated, but that was in line with expectations. We've got headline at about 2.9% year over year, at core at roughly 3.1. Now, both saw incremental rises month over month as we saw increases in services as well as core goods like new and used cars, recreational goods, and a host of other things. But really what's important about this is the fact that we saw inflation increase. This does now kind of further fuel the expectation that the Fed is going to cut rates next week. Now, we've kind of talked about this ad nauseum, but what we're really expecting next week is probably a 25 basis point cut, but combined with the inflation data is what we're starting to see is a little bit of a softer and weakening labor market. So if we continue to see weaker labor market data combined with that inflation data, well, it could give the Fed credence to cut rates even more than 25 basis points or have more frequent cuts heading into year end. Now, those are your top 3 points this week. What's on next week's docket? Well, next week, you're probably guessing it. It's the Fed's rate decision, which is going to be coming next week. Like I said, we're expecting a 25 basis point cut, but those odds can shift very dramatically given data that comes in. But once that decision is made, we will update you on next week's video, as always. Once again, that's this week's video. If you have additional questions, please reach out to your financial advisor. And if you do not have one, please follow our link and we'll get you connected with somebody, or dig into the written weekend review. But as always, please go out, enjoy your weekend while the weather's still nice, and we will see you the same time next week. Thanks again.